Hello, everyone. This is Jim Lucy, Editor-in-Chief for Electrical Wholesaling and Electrical Marketing, with episode number 148 of the Today's Electrical Economy podcast series sponsored by Champion Fiberglass. Champion began producing epoxy fiberglass conduit and fittings in 1988, and in 1989 developed the first conduit from epoxy resins that had flame resistance and low smoke characteristics. This met the most stringent codes and specifications. This episode of the Today's Electrical Economy podcast series will offer listeners some insight into electrical wholesaling's second quarter of 2026 distributor survey that we do each quarter with Vertical Research Partners. It's a boutique equity research firm that focuses on publicly held electrical companies. I'll also be sharing a few highlights from Electrical Marketing's most recent Electrical Price Index. And of course, we'll also be checking out some weekly economic indicators that can give you a sense of where the U.S. economy and the electrical market may be heading in the coming weeks and months. These weekly indicators are initial unemployment claims at the state level, rail freight car traffic, the Baker Hughes rig count, oil prices, and copper prices. Our thanks again to Champion Fiberglass for sponsoring today's Electrical Economy podcast series for 2026. For the week ending July the 11th, the advanced figure for seasonally adjusted initial unemployment claims was 208,000, a decrease of 8,000 from the previous week's revised level. The 4-week moving average was 214,250, and that is a decrease of 4,750 from the previous week's revised average. The U.S. unemployment rate in June dropped slightly to 4.2%. New Jersey and Missouri each had decreases in their unemployment claims of over 5,000 for the week ending July the 11th. The only states with decreases in claims of more than 1,000 were California at 1,876 and Massachusetts at 1,001. There were many more states with increases in unemployment claims of more than 1,000. 10 states in total actually had increases of more than 1,000. We'll be watching this data carefully to see if it's the start of a bigger trend or just a weekly aberration. Those states with claims increase of more than 1,000, New York had a huge increase, 12,838. Michigan was up there too at 3,136. Texas was up 2,664 to 16,419. Florida up 2,598 to 7,133. South Carolina up from 2003 to 4,008. Indiana up 1,900 to 4,164. Pennsylvania was up 1,537 to 11,896. Illinois up 1,156 to 9,021. Georgia up 1,119 to 5,440, and Arizona up 1,009 to 3,098. One of the interesting leading indicators that I like to watch for the overall U.S. economy is freight rail traffic. It's a measure of the amount of raw materials and finished goods being shipped by rail. It's data that's collected by the American Association of Railroads, or AAR, publishes this data weekly at www.aar.org. For the week ending July the 11th, total U.S. weekly rail traffic was 503,525 carloads and intermodal units. That's up 1.5% compared with this time last year, and it is up over that 500,000 figure, which I in the past have always mentioned as the level that indicates good solid traffic. When you look at the first 27 weeks of this year, total combined U.S. traffic was 13,652,239 carloads and intermodal units, and that's up 3.4% compared to this time last year. The data for the individual freight categories continues to be quite positive. Grain had the biggest increase compared to this time last year, and it's up 13.9%. It's followed by metallic ores and metals, which was also up a decent amount at 6.7%. Coal was the only category with a decrease of more than 1%. It's just 1% flat exactly. I've been presenting the rail traffic data since we began today's Electrical Economy series, sponsored by Champion Fiberglass since 2020. I thought you might find it interesting to continue to check out how these freight categories rank against each other in terms of sales volume. Coal accounted for roughly 24% of the most recent data, followed by chemicals at 15.1% of carloads, and non-metallic minerals at 13%, and grain at approximately 11% of all carloads. If you track the oil market, you're probably familiar with the Baker Hughes rig count. It tracks the oil and gas rigs that are operating. The data is available by state, by basin, and nationally at www.rigcount.bakerhughes.com. This slide gives you an idea of the largest oil and gas deposits in the United States. It gives you a good sense of just how many of them are in Texas and Oklahoma. and how big an area the Marcellus gas region covers in Pennsylvania, Ohio, and parts of West Virginia. The Baker Hughes rig count continues to increase, and it gained 7 new rigs in the most recent count. Operating oil rigs are up 7.1% to 452 rigs compared to this time last year, and the overall oil and gas rig count is 8.1% year over year. The increase in activity seems to be primarily being spread between Texas, New Mexico, and Oklahoma, with each state gaining 2 new rigs. Texas's rig count is in positive territory compared to this time last year, with a 21 rig increase to 274 rigs, an 8.3% gain. Oklahoma has had a notable increase in rigs too. It has 50 operating rigs right now, and it's up 19% over last year. And you have to think that with the increases that we've had over the last couple of weeks, must have something to do with the oil problems in the Middle East, but we'll continue to check this out. It is good to see them up year over year because, gosh, for a couple of years they were running at a below last year late on a year over year basis. To no one's surprise, oil prices have been really volatile since the war in Iran began on February the 28th. Year to date, the average price of West Texas Intermediate crude oil has averaged $83.07 per barrel, according to data at www.macro10s.net. The year-over-year average price flattens out quite a bit at $73.42. Economists like to call copper pricing Dr. Copper because it's a leading economic indicator for future business activity, since copper is used in so many industries. The construction industry is among the leading markets for copper because of its use in wire and cable and copper plumbing pipe. Copper prices seem quite comfortable over $6 a pound, and year-to-date they've averaged $6 and a penny per pound, according to macrotrends.net. Year-over-year, prices on the COMEX have smoothed out quite a bit at $5.55 per pound, but that number is also historically high. We got the results now for the second quarter of 2026 electrical wholesaling coiler survey that we do with the Vertical Research Partners equity research firm. VRP, or Vertical Research Partners, focuses specifically on publicly held electrical manufacturers and distributors. I'd like to share some highlights of the data with you. Electrical marketing newsletter subscribers can download the report in a PDF version as part of their $99 annual subscription. That will be available on this Friday. Respondents had the most bullish quarter responses since we've been doing this survey, gosh, going back 5 or 6 years. Electrical distributor respondents on average said their revenues grew 12.5%, with 8.5% growth on volume, 4% growth on price. Responses do reflect increased prices, and we haven't seen a 4% increase in pricing in the data for our survey in about 4 years. The volume increase of 8.5% was also the largest since the third quarter of 2022. The survey we get, I think it's about 40 to 50 distributors respond to the survey each time. They do break the data down, all distributors, utility distributors, automation distributors, and what they call the total low voltage electrical distributors, which is highlighted in the yellow on the back there. You can kind of get a sense, if you look to the left of the chart, what things looked at in the post-COVID scenario. We were seeing volume increases of 18%, 13%, 11% on volume, and the price increases a little bit after that, starting in about the second quarter of 2022. We start seeing increase of 4%, 8.3%, 6.3%. But we've been doing the survey long enough. It really gives you a great perspective of long range. And I think they do a nice job at VRP. We provide some of the contact information they survey. We promote the survey for them, but they crunch the numbers. Nick Lipinski and his team at VRP do a terrific job for us here. Along with producing some great data on pricing increases, volume increases, and the equity research that they do, the survey also puts together some really good anecdotal comments from distributors that VRP likes to provide there. And I thought this quarter, for second quarter responses, were particularly illuminating. Here's what some distributors had to say. Said one company, "We picked up a large data center job that is driving significant electrical year-over-year growth, but it is squeezing margin. Capacity is the main constraint on data center growth," said another. One respondent said they had seen an uptake in refinery engineering, lots of momentum also in nuclear power plants. Another distributor said they had a great June and they see it carrying on. One company said commercial residential construction is not following historical patterns in leading and lagging. Another respondent said record backlogs are inflationary to some extent, but the number and size of projects is clearly elevated relative to history. Indications of energy storage activity, very interesting there, and no sign of a slowdown in H2, said another distributor respondent. Direct project business is outpacing stock daily counter business, said one company. And one other distributor said gear availability and lead times continue to struggle. Now let's just hit some of the highlights and the pricing action of the June 26th results for Electrical Marketing's Electrical Price Index. As I mentioned earlier, this data is available on a monthly basis as part of a $99 annual subscription to Electrical Marketing. You can go to electricalmarketing.com to subscribe. Subscribers also get each month a downloadable Excel spreadsheet showing all the electrical price indexes going back to the mid-1990s. The changes in the June electrical price index data was most pronounced in the year-over-year data. Power cable led all other product categories with an increase of 22.3% over the June 2025 data. Building wire also had a large increase over June 25 with up 15.6%. Other product categories that had a year-over-year change that was over that of the 6.5% increase in the total year-over-year index, the total index for year-over-year, were switchgear up 9.5% prices, fuses up 9%, transformers up 8.8%, motors up 7.8%, boxes up 6.9%, and pole line hardware up 6.6%. As I mentioned, the total index was up 6.5%. These are all the categories that were up over the total index. We have about 16, maybe 18 other product categories that we track there, and that data is available specifically for Electrical Marketing paying subscribers. Month-to-date increases were less pronounced than what you've seen in the year-over-year, obviously, but there were 8 product groups with a month-to-month increase of 1%, and that is double the total index reading of 0.5% or half a percent. The product categories that were showing more than double the total index and increase from May of this year to June of this year: power, wire, and cable up 1.7%, boxes up 1.6%, wiring devices and connectors up 1.5%, fans and blowers up 1.4%, metal conduit up 1.4%, building wire and cable up 1.3%, transformers up 1.2%, and non-metallic conduit up 1%. Conduit fittings I also put in there because they were over the index, not quite up to double, but conduit fittings up 0.8%. This concludes our presentation for today. Special thanks to the folks from Champion Fiberglass for sponsoring today's Electrical Economy podcast series in 2026 and for 140 episodes going all the way back to 2020. If you have any questions on any of the data that were presented today in the podcast, you can contact me, or if there's any other types of economic data you would like us to cover in the podcast, contact me by email at jlucy@endeavorb2b.com or by phone at 913-461-7679. Our next presentation will be in 2 weeks, Monday, July the 20th. Look forward to talking to you then. Until then, be happy, stay healthy. Talk to you in 2 weeks.